Well, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, surging stocks. The Dow and the equal weight extending their record highs. We discuss and debate it with the investment committee. Joining me for the hour today, Joe Terranova, Stephanie Link, Jim Lebenthal, and Josh Brown. Take you to the market, show you what we're doing at noon in the East. Not all that much, but we have been surging. Dow is, right? I said record high there. S&P's hanging in by 4. NASDAQ's given a little bit back. Retail sales were a miss, a bad miss. Capital Econ, no real positives. They describe it. But stocks continue mostly to go up because we know about this K-shaped recovery. And, as UBS says, we believe the backdrop remains favorable, driven by resilient economic growth, supportive Federal Reserve policy, and AI investment and adoption. I will say this, in terms of supportive Federal Reserve policy, Beth Hammack is the Cleveland Fed president. She's on the tape, making some comments, and she is a voter, by the way, this year. She doesn't sound so supportive of future cuts because she says she's preferring to err on the side of patience for future cuts. Quote, we could be on hold for quite some time. Monetary policy is in the vicinity of neutral, and that is the latest from Beth Hammack. So you take that all into consideration. You know, if you're bearish, you probably hang on the, well, is consumer strength starting to falter? That's what Capital Econ says today as they look at the retail report. If you're bullish, you are like Steph and UBS, which suggests the backdrop's still really good. Resilient economic growth, the Fed's still supportive, don't hang on what, you know, the Cleveland Fed president is saying. It's just one person and one vote. And AI adoption is yet another reason to be bullish. So what do you make of all that?
Well, Steph is right, and Steph has been right. And, you know, there's a whole cottage industry of people who want to nail the turn exactly as it happens. So they see a negative data point on the consumer, and they spin it up and extrapolate it into this whole thing that's just not based in reality. I know we're going to talk about the travel stocks later, but I'm sorry, Hilton and Marriott is not like me pointing at to the Four Seasons Hotel. So yeah, it's K-shaped, but honestly, people are not voluntarily crisscrossing the country on vacations if the consumer is cracking. It's just not the way reality works. So I know how badly people want that turn, and they want to be, see, I told you. But the thing is, you listen to the JP Morgan conference call, they issue everybody's credit cards. They see all the debit card spending, et cetera, et cetera. And they almost have to apologize. Jeremy Barnum has to come on the call and say, guys, I know what you're all looking for. And once again, 12 straight quarters, it's not here. There is no sign of exploding credit card liabilities and past due this and auto loans being, payments being missed. We don't have it. I'm sorry. So until we do, how about we focus on exactly what Joe and Stephanie are talking about, the absurdly strong earnings picture. If you think about it, analysts are now expecting profits to grow 12.3% year over year. That is 386 basis points ahead of what the estimates were right before we got the first reports of the season. So 8.5% was the expectation, and we're doing 12 and change. This is quarter after quarter after quarter. So I'm not saying every consumer is okay. I'm pointing out, for the most part, that is not the story. It's not.
We get it. Yeah, I mean, that was excited, right? His AirPod,
he was excited.
AirPod almost blew out of his ear.
By the way, that's a hell of a suit and tie combination.
Thank you. Thank you very much. So, Jimmy, I turn to you and I say, do you remember the Ed Yardeni bullishness of yesterday? The delivery economy, as he put it, the transports, and the production economy, the industrials, are confirming the strength that both Steph and Josh are talking about. Caterpillar, by the way, nobody owns it on the desk here. They wish they did, because the target goes to 825 from 735 at Bank of America, reiterated by that stock has been. Look at it over the last year, guys, not intraday. Please break it out. Thank you. And they talk about, look at that. And they talk about turbine demand broadening out. It's not just data centers. It's exactly what Ed Yardeni is talking about. It's exactly what Joe has been talking about and what his Joe T ETF has been moving about. Because the industrials exposure is 19%, it's the second highest in the group, in the ETF, but behind financials. So obviously that's where momentum has been. You own a lot of these stocks. We'll put Delta in there, industrials, Amtech, Axon, Cummins, Emerson, Ferguson, Hubbell, Rockwell, Waste Management, General Dynamics, Parker Hannifin, Rollins, Trane, Quanta. Hello, industrials.
It's the derivative trade. It's a derivative trade off the AI. Steph, you've been doing a great job talking about it. So it is Vertiv, it is Quanta that is really strong in the last 5 days, but there's some other names underneath the surface that have bubbled up, and we've added the exposure there. Names that are kind of unfamiliar, like Ferguson, like Hubbell, like Emerson, Trane Technologies, another name as well.
It's short cycle.
It's short cycle, and it's really the AI derivative trade, but it's also the industrial upcycle that we're seeing.
If you look at ISM's over 50, 52.6, the Chicago PMI 2 weeks ago was 54. That is absolutely right, Joe. It's not just AI. It's really hardcore manufacturing that's starting to improve. That's short cycle.
I'm coming back to you in a minute, Steph, because Steph has a move today that plays exactly into this story. I wanted to get to Joe because he's got the most industrial exposure on the desk. But now you've heard everybody sort of weigh in, and then in the context of the Yardeni note and what Steph, Yardeni, Josh, all at UBS today, all sort of channeling the same thing.
And doesn't it just make sense? I mean, we have talked for years now about not just data center build-outs, but infrastructure and supply chain onshoring. And people like Steph and me have talked for quarter after quarter about we're going to have to move stuff. We're going to have to build stuff. And so if you think about aggregate materials manufacturers like a CRH or Vulcan Materials or something like that, of course they're doing well. And of course transportations are doing well. And industrials, as you mentioned, Scott, it's not just the excavators that are out there building, and again, more than data centers, building roads, building new factories. It's the turbines that Caterpillar produces that we need as all of these data centers are looking for energy sources.
Why don't you own a Caterpillar? Why doesn't Steph own a Caterpillar? Why don't more people on this program own a Caterpillar? The stock has been a ripper.
So stock's been great. So has Delta. So has Wabtec.
We're talking about different businesses.
We're absolutely not. We're talking about the same fundamental drivers, We are building things in America, and it's great. I've said this for 3 years. That's excitement. Maybe the slap was just coming back at you a little bit when you say Joe has the most exposure in industrials by the number of names. I run a much more concentrated portfolio, 25 names.
Okay.
So when I talk about something like Delta, that's a 5% position in my portfolio. That's a big name. We're moving people. Wabtec's a 4% position. That's, they just did this great deal with Union Pacific not that long ago that they're going to refurbish 1,200 locomotives.
Okay.
We're moving stuff. If you're going to build stuff in America, you got to move aggregates, you got to move steel, you've got to move energy.
Look, Wabtec's up 14.5% year to date. Lockheed's up 29, Emerson's up 21, Quanta's up 21, Trane's up 19, Ferguson 17.5, Cummins, Build Engines up 15, and on and on and on and on. Steph, your move is buying more of Rockwell Automation.
Yeah, so it is a short cycle, so I like that. This company beat earnings, and earnings growth was 50% year over year. The revenues were up 12% year over year. Organic growth was up 10%. Margins expanded, and net income was up 48% year over year. This is a company that is doing a really good job in automation and robotics, and that hasn't even really kicked in just yet. This is also a self-help story, which is why I point out to the margins. And guess what? I got all of that, and the stock fell 7% on the earnings day. So that's why I added to it.
It's only up 5.5% on the year.
And I think it's absolutely a sleeper name for 2026. And I also think the rails are a sleeper story for 2026. Because exactly to what you just said, Jim, you have to move stuff, to build stuff. And these stocks haven't done that much. Union Pacific, I like very much, and it's trading below the peer group. I know why, because of the Norfolk Southern deal, and we're waiting for the approval. But I think the rails are absolutely a place where you want to put money for this year.
I agree with that. See, correct me if I'm wrong, because just looking this morning at our momentum screen, I saw the rails rising. I think CSX, if we could show a chart, is a 52-week high.
Yes.
So it's evidence to exactly what you're speaking towards in the economy, but they're delivering on the earnings as well. The rails are coming. The logistical play is really strong. Prologis is a name that figures in that as well.
Josh, go ahead. No, I'm sorry. Hold on. I'll come to you 2 seconds.
I want to add one thing that's important.
Jimmy's all fired up.
I'm sorry about that. Sometimes. That next level down, when we talk about these industrials and transportations that have done well, not just this year, but in terms of their operating performance for years, what that means is their balance sheets are getting a lot cleaner. Now, this is next level thinking. Stephanie, I saw you turn to me because you know what I'm saying. If the debt levels go down, that means more cash flows, more earnings that are attributable to us as shareholders. That eventually means higher dividends. It means higher valuation. If you're wondering why Caterpillar is trading at a low 20s multiple and maybe somebody thinks it should be in the high teens, the balance sheet looks a lot cleaner than it did 3 years ago.
There's the XLI. That's just obviously an intraday, but it's moving higher. 2 signs Jimmy's worked up. He hits the desk and he goes for the water. He hit the desk earlier. He just went for the water.
I didn't know it was going to be that loud.
Enough.
I didn't know it was going to be that loud.
Oh, my goodness.
Elizabeth, we got to be quicker. I got to see Jimmy hit the water. I mean, that's a sign he's all worked up. Josh, you are a low aviation economy, but still, I know you're a believer in these themes we're talking about.
Yeah, well, look, I think the number one chart we've been talking about on the show is the RSP. It's the equal weight S&P. It's an Invesco product. You can throw it right on your screen where you look at SPY and Triple Q. This is the chart. Give me more than just the last 2 hours, guys. This is the chart that tells the story. We were talking about, like as recently as 5 or 6 months ago, the Mag 7, the concentration, oh my God, tech is 35%. Throw all of that out. It's a totally different environment now. And just think about the nature of the stocks that are breaking out, whether they're in industrials or they're in materials, or you're finding names in healthcare. You're finding names that are not susceptible to the things that have plagued the software industry and can't be replicated by a chatbot or an LLM. And just they're going up, and there are so many of them, like thousands of stocks advancing, not all making new highs, but this is the chart that tells the story. And the R in RSP, for people that haven't been around as long as Jimmy, Joe, Steph, and I, that comes from Ridex. They were the only company that had an equal weight index product. And I guess when Invesco bought it, they kept it, the R there. But like, that's how long this has been a trackable index, and not enough people are paying attention. When we talk about the broadening, it's not a one-day thing. This has been going on now for weeks, and will probably stretch into months and quarters.
So let's talk about a couple other things. Okay, gold was lower the last I checked. We can show it just to give you an idea of where it's currently trading, because Wells Fargo says it's going a lot higher. That they expect the rally to continue. Pullbacks or buys. Can we throw that up? Let's look at the chart, please. They raised their price target to 6,100 to 63. $1,000 at least higher from here. $1,100 to $1,300 higher for gold. Bitcoin was back below 70K. Michael Saylor, strategy, says credit risk around that name's overblown. He's going to keep buying it, quote unquote, forever. Robinhood reports tonight, as crypto has not traded well, Robinhood hasn't really traded well either. Back that out. Give me a year to date, guys, please. Coinbase has been in the news too. So there's your move lower year to date, down 24%. What do you think?
First of all, for Robinhood tonight, I think a lot of people, myself included, look at this company and automatically think crypto. And that, look, that's correct. I understand the decline we're seeing is related to that. But the overall exposure in their revenue that they have to crypto continues to decline. And it's now at single digits at 9%. So there's more to the story with Robinhood. You have to hear that story tonight. You have to hear about how they are diversifying the overall model. I'm not going to dismiss that the stock itself has pulled back precipitously from October. It's a prove me moment this evening for Robinhood, but let's not just make it totally about crypto.
No, but it is what it is. I mean,
there's a stigma. There's a stigma related to it for sure, and obviously it's been negative as it relates to what the impact on the stock price is. But there is more to the fundamental story for this company.
All right. Let's talk about something that we've been leading with a lot, or certainly getting to higher in the program for the last, gosh, feels like months, and that's software, which is getting a bounce today. And it's noteworthy. And JP Morgan today mentions that they believe the balance of risks is increasingly skewed towards a rebound, especially in what they deem to be quality segments like cyber, which is well loved on this program. They look at AI resilient companies. They like Microsoft. They like Palo Alto. They like ServiceNow. ServiceNow hasn't traded well. Not for that matter, Microsoft hasn't either. There is CrowdStrike. There's Datadog. There's Zscaler, and there is Checkpoint. And then there is Synopsys, which Stephanie Link has a strong buy on.
Yes.
Because you just bought more.
I did. It's a new position, though. So I started small. The stock's down 6% year to date. It's down 19% in the past year. These guys make mission-critical software for the semiconductor companies. And the more complex chips get, the more they need Synopsys' stuff. They have 41% market share. 70% is recurring revenue. And they've just done a big deal in M&A, which is going to add about $3 billion to their revenue base. And their backlog is about $11.4 billion. So I like it. I'm just using the weakness and the bad days in software to be adding to it, and I'll continue to do so.
Okay, you know who else likes software? Retail. Retail likes software. Because Vanda Research today says there's been record buying from retail. Million rolling net retail inflows into the IGV surged to a record as of the close yesterday, more than double the prior peak seen during the late 2024 drawdown. So retail looks at this and says enough's enough. There's your chart of buying. Josh, you have a thought on that? Daewon Palantir, which is a very popular retail name, upgraded to a buy at Daiwa. The target does come down a bit, but nonetheless, they are bullish there.
Well, I was out buying the dip in some of my software names, so I obviously don't disagree. I think this has gotten completely carried away. I understand that in today's day and age, these kind of like trading memes catch on like wildfire, and it's not just retail, institutions, hedge funds, everybody gets the memo and reacts. But the interesting thing about retail is in prior eras, you would look at something like that inflow chart and say, oh, that's the dumb money. No, the retail traders are hip to the game. They understand that in an overreaction, you go against what the screen is telling you. And not always, but in a lot of cases, we have V-shaped recoveries. Now, I don't think we'll get a V-shaped recovery for software. I think, unfortunately, these companies will continue to re-rate lower, even though their results are great for the most part, because people just don't believe that they're all going to make it through the AI revolution. So I'm glad that I added to some of my favorite software names. I am not actively out there hunting for new opportunities in the space, and I think, unfortunately, the rebounds are going to roll, and these names will stay in a downtrend. They're guilty until proven innocent, and I don't know when they'll be proven innocent. Could be a long time before people really believe that these companies are all going to make it.
Fair points. Hard to argue with any of that. Quick thought from you before I move to something else.
Agreed. I'm very comfortable in the moves we made, reducing the software exposure down to 5 names. I think stability is the word you want to use here, what's happened over the last several trading days. It was the Oracle debt offering. Today you have earnings from Datadog. The stock is up 16% reacting to that. Tomorrow morning you're going to hear from AppLovin. That is going to be important for the sector stability that we're seeing the last couple of days.
All right, show me shares, please, of Qualcomm, QCOM. And we can look at that on an intraday, please. Resume sell at Morgan Stanley. Not doing anything, so give me a little longer look now, if you would, please. Resume sell at Morgan Stanley. Memory headwinds will create handset shortfall. Resume coverage at underweight. 132 is the price target, so they're looking for a little downside there. Executed well, they say, under challenging circumstances, but may have maximized earnings power for now. Jimmy, owns Qualcomm. He's already gone through one water.
I might have to double.
One.
I might have to double.
He's
fist
almost
here.
done with his second. Liz, help me out.
I might have to double fist
All right.
Qualcomm.
So take this.
Yeah, I mean, they have done well under the circumstances, and the big circumstance that is not in their control is getting access to memory chips. And we've talked about this for a long time, several weeks now, about Texas Instruments, Micron, every one of those companies saying, listen, we're taking all of our production of memory and we're sending it to data centers. That has meant that there are supply chain shortages for Qualcomm. I do think that that's a temporary set of circumstances, and in the meantime, the actual products that Qualcomm is developing, whether it's for handsets, but more importantly, for automotive, for Internet of Things, for data centers, that these are applications that the customer wants. So as soon as we can get more memory supply, and even if it's at a higher price, Qualcomm should be able to raise their prices to adjust for it. But there is a time period here, and I don't think this is a moment where you have to rush out and buy Qualcomm. I don't think it's a sell either. I think that's way too dramatic. I think it's way too cheap to sell it here, but it's going to take some time for those supply chain issues to work themselves out.
Okay. All right, welcome back. Let's get to this move that you have, Josh. I probably gave it away. But nonetheless, you sold Otis. It's down 14% since you bought it, which is interesting.
Yeah.
You know, we talked about the economy's doing well. The industrial economy is doing well. What's up with this one?
This one is much more connected to office buildings, apartment buildings, because it's elevators. So it really has nothing to do with when we talk about real estate, or very little to do with. The story here is that it's two businesses. One is actually building and selling the elevators, which everyone is aware of, but the real business is the maintenance contracts. You can't install an elevator and then not pay people to inspect it, maintain it, update the equipment, et cetera. So it's like sort of an annuitized business, and it's global, and it's a great business. And the only reason I sold it is because there were too many other opportunities, too many stocks breaking out. So I may come back to this at some point, but it is currently not a front burner.
Okay. So the best stocks in the market today, you're talking about halo stocks. What does that mean?
Yeah. So I think the antidote to people's concerns with how disruptible some of these information technology businesses are, whether we're talking about something like an S&P Global, which has just absolutely collapsed, and that's, you know, obviously the index business, the data business, or we're actually talking about vertical market software, some of the things that people think are immediately going to be replaced with AI. I don't believe that story, but it doesn't matter what I believe. The market does, and I don't know for how much longer that will continue. So when we were talking about in the first segment, the stocks that are making new highs, the stocks that are going up, what all of those have in common, whether we're talking about a consumer staple stock, or we're talking about something that moves earth, or is involved in mining or agriculture, or data center build-outs, they are heavy asset companies with low obsolescence risk. So Halo is heavy assets, low obsolescence. And that is the through line of all of the things that are working this year. The market is sorting out what can be replaced by the next product launch from Anthropic and what can't. And you really can't type something into an LLM and get a Hershey bar in your hand. And the market understands that. You obviously can't see a situation where Claude is going to produce a tractor. And so that's the separating line between what I think is going to work this year and what's probably not going to work and is currently not working. And it's a really simple litmus test, Judge. It's a really simple question. A ticker comes across your desk, you're researching it, you're looking at it. The earnings is one thing. That's math. The sentiment is really tough. How do you get the multiple right? What people are going to be willing to pay? Apply my test. Does this company have heavy assets, and what is its obsolescence risk relative to the $700 billion some odd dollars in CapEx that are being spent by the AI complex? And if the answer is no, they can't replace this, and the assets are meaningful, maybe it's a utility, maybe it's an industrial, maybe it's a staple, but chances are you have a stock that could actually work in the year of our Lord 2026. Everybody gets that? Everybody with me on the desk?
We got you. The chart's not worth chasing. The chart's to get constructive on. And messy charts, Lauder, Estee Lauder is one of those on the list, which Stephanie just bought more of. So let's go to her. Let's hear about this one, Steph.
Well, I thought the quarter was actually very good. They beat on earnings, revenues, margins, and organic growth. They guided conservatively, but they did inch up organic growth. But people were expecting a lot higher of a number. But down 21% after a company beats and does raise the organic piece, just not by as much as people wanted. That, to me, what presented an opportunity. I really am excited that China has actually accelerated. Their growth was 12%. That was really very good, offset by U.S., which was flat. Everybody wants the U.S. to see a recovery because the two regions are 50% of their revenue. So you need the U.S. to pick up momentum. I think they will. I think Beauty Reimagined, this is the strategy that this CEO, and he's fairly new, has in place, and I think they are seeing some momentum. You'll have fits and starts each quarter, but I thought down 20% was a gift.
All right, we're back. Interesting story today in the Wall Street Journal. Wall Street's hunt for cheaper stocks goes global. Nothing new. The only difference is that, as they say, last spring it was sell America. Now Wall Street's hot trade is buy everywhere else. So less about selling the U.S., because obviously we're at record highs on the Dow and the equal weight, et cetera. But there's a lot of interest elsewhere. Flows into international funds are huge. The Brazil ETF is up 21% year to date. Year to date. Stephanie Link's been trying to tell everybody about it. She's been in it. And she's happy today.
I'm happy today, yes. So Brazil, it's very favorable demographics, just like India, which I still like, but I don't own. But they also have favorable monetary policies. I think interest rates can come down because inflation has actually been making progress over the last couple of quarters. Most people think that Brazil is a basic materials and a resource play, and it is, but it's also a power play. They have the power that everybody in this world wants and doesn't have. And so I think they're going to be a very big beneficiary of AI, and I don't think people really appreciate that aspect to it.
Emerging markets ETFs up 11.
It is. So
What do you think here?
I think the fundamental reasoning why you're seeing interest once again, and understand you've had this dramatic shift in sentiment where for years you had investors and the financial services community looking at the emerging markets at an underweight positioning. And now you've had this paradigm shift. So it is the fall in the US dollar. Earnings growth in 2025 in the emerging markets actually outpaced the US. So the US is doing somewhere around 14%. You see the emerging markets doing 29%. You also get the exposure to technology as well. If we could show EIS as I speak, that is Israel. I talked about it a lot last year. Israel is the second leading exporter of technology. That's trading near an all-time high. You could also throw up EWY as I speak. That gets you exposure to Samsung, Taiwan Semi, in Asia. Remember, the AI supply chain is domiciled there as well. And then not an emerging market, but developed international is really strong as well. You could look at the EWJ, and you'll see the strength that's represented right now in Japan. There's opportunities to go outside the U.S. for the very first time in years.
Farmer Jim.
The same factors that we were talking about at the beginning of the show about favoring the RSP. We didn't really talk about small caps, but those are sectors where the industries that are represented there are also represented in international and emerging market. Which sectors am I talking about? Industrials, financials, energy, material. They are heavily expressed relative to the U.S. market in international development. So
Did you do any channel checks on your recent trip?
Boy, that's going way. Do you remember what that reference you just made is? Do you remember where that came from? I'm not going to embarrass myself. Yeah, I'm not going to embarrass myself. You've got to work for it.
JC
I don't know, but
dude.
Just answer.
He gets the He gets.
Oh, it was JC
Penney.
That worked out well.
Yeah.
What about this?
I actually did win the 2016 trading competition on JC Penney. My problem was going back into it in 2017. Your question on channel checks?
We're good. Let's talk some earnings. We do have the setup. Gilead after the bell today. Joe T has that.
$1.78 in EPS, $7.7 billion in revenue. You want to look at the prescription HIV drugs, see what the uptake is here. The stock is up 20% since January 20th. Be a little bit careful here. It is somewhat parabolic in the nature of the way it's traded last.
Zoetis is Thursday, Steph.
Well, I'm a little nervous about this one. The only good thing is it's actually down 25% and low expectations. This company's done a poor job in terms of execution in the face of an exploding animal health environment. Elanco now trades at 27 times. This thing trades at 20. And I think their product setup is really a lot better. So hopefully they can execute. If they do, I think the stock can go much higher.
Vertex, Thursday after the bell. Jimmy, take that one, please.
Yeah, very good company. And what we're looking for here is what is the script growth in Journavax, their pain medication. A little pricey here in the low 20s, but that's been a multiple that it's stayed at for many years, and I think it'll continue.
Toast, Thursday after the bell. Josh.
I think the results will be great. I just don't know if anybody's going to care. This was one of the names I bottom fished in late last week. Look, the platform has already surpassed $2 billion in ARR. About half of that is payments ARR, and they're up to 156,000 locations. That's restaurants, which is up 23% year over year. I think the momentum continues. The report will be great, but the reaction, I'm mystified at this point.
Okay. PG&E. Jimmy, that is Thursday before the bell.
Yeah, what should have been a boring utility got unnecessarily exciting last year, those horrible fires out in L.A. People were concerned that PG&E was the culprit. It was not. However, there are some financial implications, and we should get some insight into that on the quarterly call. Stock's in an uptrend. I'd like to see it take out 17. I think it will.
Okay, one of Jimmy's favorite stocks.
Oh, yeah, WIM. It's in no man's land.
Thursday after the bell.
It's in no man's land, and I say that because I trimmed it, I don't know, maybe 3 months ago at 126, shot up to 130, now it's down at 116. I'd love to buy back what I sold below 110. It did that. It was down there for just a nanosecond last week.
Okay.
But at 116, I'm not going to sell it here. I'm not going to buy more. Let's see what happens with earnings, and I'll decide what to do with it after that.
All right. Josh Brown, final trade.
Uber just went live with their Apollo Go robo-taxi in Saudi Arabia today. This is my stock to go.
All right, Jimmy Waterworks, what do you got?
Yep, I'm well hydrated. Oracle up 3 days in a row. Even if it's a relief rally, I think it's got more.
Steph.
Dow Chemical, self-help.
Goldman Sachs to 1,000.
Okay, all right, well, watch that. I'll see you on the closing bell.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Tuesday, February 10th. It's 3:25 p.m. Eastern Time. The market is actually still live. The market has not closed yet. The Dow is currently up 0.22%. NASDAQ is down 0.41. S&P 500 is down 0.18, and the Russell 2000 is down 0.15%. What are we going to do? We're going to cut in this video. We're going to cover not every single stock that they talked about on the show, but the majority, and there are quite a few. There's about 41. I am going to, I've got the strongest ones highlighted at the top with the little blue flag here. We're going to look at the technicals, all right, because that's really important. We're going to be using the Ichimoku indicator here. I'm going to give you guys a quick little synopsis of that as well. I'm going to skip through. I'm just going to very quickly run through the negative stocks as well. I'm not going to spend too much time on those. I'm going to focus mostly on the ones that are looking very bullish, okay? The ones that actually make sense from a technical perspective. A lot of these are good stocks, but they might have some issues on it from a technical perspective, and it's important to use both fundamentals and technicals. Now we'll look at the S&P 500, the Dow, the Russell, the Euro stocks, and the Qs. We will also take a look at stocks within the Mag 7 like Apple, Google, Meta, Microsoft, Netflix, NVIDIA, and Tesla, and 3 stocks from one of our members, Roku, PayPal, and TWLO. So why don't we get started? First thing we want to do, though, is we want to take a look at the heat map. Very important. Let's see how the individual stocks within the S&P 500 are doing today. And you can see that the bank stocks here, like JP Morgan, Wells Fargo, okay, those are down. Bank of America, Citigroup, okay. NVIDIA's down a little bit, 0.47%. Broadcom is down 0.9%. Micron down 3.14% currently. Intel is down 6.68%. Palantir is down 3.01%. Companies like Oracle up 2.49%. What else? We got Tesla over here up 1.66%. Home Depot and Lowe's is up a little bit. Walmart, Coca-Cola, Costco down. Google's down. Meta's down. Eli Lilly is down. The utilities are doing really well. Look at all the green there. Real estate too. Basic materials as well. So yeah, if we look at let's do one more thing. I want to check out the themes. This new feature within FinViz Elite that I like. Okay, and we can find the strongest ones here. So yeah, you can see the specific like design and development operations. So if I highlight that, you'll see some of the stocks that pop up and the ticker symbols and the percentages that they've moved up. Okay. You got multi-cloud under cloud computing. There's some ticker symbols for you. For example, RXT is up 7.61% now. May not be a stock that you'd want to get to buy, though. It's only a 45-cent per share stock, but you get some ideas. DDOG is up 14.66% today, $130 stock. Um, so yeah, we've got the railroads are looking pretty good. Suppliers, self-driving under electric vehicles, the chips, auto semiconductors, and power electronics. Some of the stocks there. Tourism, check this out. There's some interesting, like, Marriott is up 300, 9.07%. That's MAR. All right, guys, let's get into the stocks now. Let's do that. Let's go ahead and start off with the actual index ETFs first. We're going to look at the S&P 500 first with SPY. So let's do that. We got the weekly chart on right now. Now, there's a level here, the 697.84. Okay, that's the cost for, that's the high right there from that candle. That needs to be broken. We're currently at 693.40. If you look at the weekly chart here, we're still in consolidation mode, meaning price is just moving sideways, and it has been for multiple weeks. In fact, 3 months or more. It's just been kind of not a whole lot has been happening here. Um, Guys, we're also using something called the Ichimoku indicator. So let me show you that. Let me get rid of these lines for a moment. Just kind of show you how the indicator works. There are some people new to this channel. So what we have is 5 lines, okay? The Ichimoku indicator. You've got the green line, which is the midpoint of the last 9 periods. It's the fastest moving average. You've got um, and that's called Tengen-sen, okay? The green line there. The midpoint of the last 26 periods is called the Kijun-sen. Right? That's the red line. It's the slower one. Then you've got the Sengu span A, which is part of the cloud, which is the midpoint of these 2 moving averages projected 26 periods into the future. That's where you'll always find it, 26 periods out. And that's called the Sengu span A. And the Sengu span B is the purple line that you see right there. That's actually the midpoint of the last 52 periods. Instead of plotting under or above the candle, it's actually plotted 26 periods into the future. And that is how the cloud is actually plotted, okay? And then we have one final indicator, the Chiku span, which is the current price projected 26 periods into the past as a line form, okay? So instead of a Japanese candlestick, you're seeing it as a line. The significance of this is that if, for example, you see that white line above the candles 26 periods ago, that's very bullish. If it is under, it's very bearish. So stay out of those stocks. I mean, the idea here, Ichimoku stands for at a glance. So the idea here is at a glance, we can quickly assess what's happening in the stock market in a specific stock, ETF, currency. It doesn't really matter. Ichimoku's been around for a very long time. It was published in the late 1960s, still used by financial institutions today. And it's one of my favorite indicators. And we'll also be using the directional movement index, which I'll go over as we get into the stocks. So let's start off, like I said, with the S&P 500 on the weekly chart, still very bullish. Here's the daily chart. So now these candles represent one day. Okay, and here we are today on February 10th, Tuesday. And so as I zoom in here, you can see that we have a red candle. That's almost like a spinning top type candle, and it is a reversal. Oh, now it's actually dropping some more, down 0.1%. So we have a live market here. You can see that if I switch it to a 1-minute chart, you'll see this candle actually moving. And here's the time, 3:32 p.m., right? You can see it by the second as it's moving. So right now, the SPY is not looking particularly strong today, right? But it's because it reached a level of resistance. It came up close to that 697.84 and got rejected again, as it has so many other times, right? Like it did over here, here, and here it is again. And so unlike DIA, which is the Dow Jones, and let's look at that one, which is up 0.27%. That one has broken through that consolidation. So the Dow as an index ETF here, the DIA ETF, is significantly stronger as far as I'm concerned. The fact that it broke through this level and we see the momentum here increasing to that green line. So remember earlier I said we don't talk about the direction movement index. This just helps us. It's a secondary indicator that can help basically confirm that the move is true and real. And when you see, for example, that white line, which is the ADX moving up, and you see the green line moving up and the red line moving down, and the green line is above the red line, all those things, then you have a very bullish sentiment, bullish momentum. The ADX, the white line, represents momentum is increasing. Over here, it was when it's declining, like you see over here, and you see all these zigzags taking place. What that means is there's consolidation taking place. Now that you can see, if I go straight up, you see that big volume candle right there? Notice how the white line started moving up at that particular moment? It happened on that candle. So when it broke through that 496.34 level and the volume was increasing and the ADX was moving up, okay, it's something. And now look at it. You can see it's up 0.26% today, unlike the other stocks. So it just looks stronger. I mean, I'm not saying that this thing is for sure going to continue to take off going into the rest of the week, but at least for the time being, it looks the strongest, obviously, out of the bunch, right? The Russell 2000, this one still needs to break above this high here, okay, from January 22nd. And so it's got a little room to run. But what I like about the Russell, at least, is it broke this little diagonal trend line on that specific day. And that happened on higher volume, okay, down below here. So, but today it's down 0.13%. FEZ Euro stocks. Okay, this is the Eurostox 50 ETF. All right, well, let's look at this. And let's go ahead and throw on a trend line real quick while we're here. There it is. Whoops, right there. The high of that little candle. So the high there is 68.55. Okay, it's a daily level, so we'll leave it as a red color. The purple is monthly levels. So we're above the monthly. If I switch it to a monthly chart, you can see that if we go back in time, we are above these highs from 2007. Okay, that's the last time that we were at those levels. And we're above those now for 2 months in a row. So the Euro stock's looking very strong. Here's the weekly chart, and here's the daily. So right now we are finding a little bit of resistance at that level, but I like what I'm seeing overall. You can see the ADX is moving up. See how the green line just dropped a little bit? That's because there's a little bit of a reversal taking place, and it's down 0.25. Okay. And by the way, that could be very short-lived. Tomorrow we might see a break right through, but I'm just showing you what's happening live right here so that you can assess, what you want to do going forward with these stocks. QQQ. Now, the Qs, on the other hand, have not really been performing. And this is where the Ichimoku comes. It actually sort of unveils what's truly happening within this ETF. Weakness is what I see. Why do I say that? Unlike the other index ETFs here, the Qs dropped and closed under the cloud here. Now that took place on, let's see what day was that? February 4th, Wednesday last week. That was Thursday, February 5th. We started recovering. And look what happened. It stalled right inside the cloud there and is now dropping down 0.39%. So yeah, you have to be a lot more cautious with the QQQ ETF. Here's a weekly chart as well. You can see it pulling back. It's still in between the two moving averages. It's still consolidating. What I don't like about the Qs as well is that if you look at the weekly chart here, the ADX is moving up and the red line is above the green line. So that's kind of very negative, actually. I'm not sure that the Qs are going to break through that 637.01. We're going to have to see some evidence to substantiate that. This is an evidence-based approach here that we're using with our trading. The VIX, the volatility index, that moved up a little bit, just 0.86, not a whole lot. So it's not like the volatility is spiking. We actually do want to see that dropping, not moving up like it is right here. Right, let's take a look at some of the Mag 7s, like Apple, for example. What's happening? On the weekly chart, it looks okay, right? Prices above moving averages, prices above the cloud. That's what we want. The Chiku span, the white line there is above the price. The green line is above red line, but the ADX is not really showing a lot of strength here. It's just moving downwards, right? And it's reflected here in this pattern, which is called a bearish harami. It's when you have a large bullish candle like this one here, followed by a small red candle. It doesn't really matter where this lays, right? It could be at the top, it could be down here, and or in the middle, okay? But if it's a small red candle and it's within the body of the large green candle, like you see right there, it's bearish. And we do have a cheat sheet that we can take a quick look at. All right, so here it is, and we're gonna look and find it. And there it is. There's the bearish harami, the large candle that you see right there, followed by the smaller one. And it is bearish, and it's a double candle pattern. The opposite of that would be the bullish harami over here on the left. See the large red candle followed by the small bullish one, right? So this is the negative version. And so it came close. I mean, it's not hasn't even come close to the 289 level yet, but there's a slight possibility that we might see Apple dropping this week. Here's a daily chart. You can see it's basically turning over a little bit. It's inside the Ichimoku cloud right now. We still have a bearish cloud, meaning that the single span A is still under the single span B. So keep an eye on that. Google is under the moving averages. It's still holding up above the cloud, so that's bullish to that extent. It has not broken into the cloud yet, but take a look at Google. The ADX is moving up. The negative DI is above the positive DI, so be really cautious here. That's the daily chart. Here's the weekly. Look what's happening on the weekly chart. Last week we saw see that wick right there. That represents the low of the day, right? So again, looking at this understanding candles, when you look at the body here, that's when you're looking at a red candle, the opening is the top of the body of the candle. The closing price is right there. Okay, at the bottom of the actual body. They call that the body of the candle. The wick at the bottom, okay, so you see that wick, that's the low, and that the wick on the top is the high of the day. But this is the open, this is the close. On a green candle, the open is here and the close is here, but the highs are the same, right? And the lows are based on where the wick is. So looking at this again, let's get back to that. It's a reversal candle. It's called a spinning top. That happened on the weekly chart last week. We're currently under that 9 period. You can see that right there, the green line. And so, yeah, I mean, it's down 1.5% today. Okay. Will it bounce here? A lot of times price will come down and then find some support at the cloud and then bounce. So it could certainly happen. But would I be adding a position here? And the answer is no, because we're in a state of weakness, at least temporary weakness. Okay. It's not fixated or fixed. Meta platforms, as you can see here on the daily chart, we are above the cloud, but we're down 0.47%. We're currently under that dotted yellow line. That's the 200-day moving average, and we're also under the Tenkan, the 9 period. So no on that one. Microsoft, we're under the cloud, very bearish. Okay, look how it's stalled right at the green line there. And whenever you see the fast moving average, the green line there under the red line, and these moving averages are actually under the cloud and prices under the cloud, this is a very bearish scenario because everything is going against Microsoft right now. You've got a bearish cloud here. You've got the Chiku span under price. So you can see how quickly and easily you don't really need to spend too much time with analyzing Microsoft. Just skip it, basically. If you're trading the daily chart, if you're trading the weekly chart, I'd skip it too. It's under the cloud in the weekly as well. Here's Netflix. Once it got under the moving averages over here, you can see that it's dropped about 34.18%. All right, now got it back above here briefly, got back under. You can see that there's a little bit of, you know, playing around this moving average here. But once we had that negative crossover right there, that side basically, signaled that this thing is probably going to continue to the downside, especially once price on Netflix got under these lows here. And you can see that net was unable to get back above those lows. See how price stalled there multiple times and then dropped. So Netflix, I'd hold off on that. Now, the good news with Netflix is that it does seem to be stalling at a support level finally, which is back here, the $82.11 level that I drew back on January 9th. So it's created this level a while ago, and it's based upon these two lows here that you see, one here and one here. Price came to that level, bounced, came to that level, bounced. Will it bounce here? It's possible. We'll see, but I wouldn't be jumping in. Here's Nvidia. You can see this sideways action. Prices in basically sandwiched almost right in between these two moving averages, and the faster one is under the slower one, so that's also bearish. Red line's above the green line. That's also bearish. The Chico span is still above price, which is good, but it's very close to the price. And the cloud is still bullish on the weekly. Here's the daily chart, which looks a lot more bearish. Price is inside the cloud. What about Tesla? Tesla is under the cloud. Okay. Also, even though it's up 1.6%, it's 4 days in a row that's been moving up. It's still under the cloud. It's still bearish territory. All right. Let's talk about the strong ones, the CNBC stocks that they talked about on the halftime report today. Josh Brown and guests. Let's see. Caterpillar is 0% right now, folks, at 3:44 p.m. Has now. Do you see the? Do you see how the body is just flat? That's what the 0% means. It means that the opening price and the closing price was exactly the same. Hence, there's no body that's created really, right? You just get a like a cross, and that's actually a reversal candle after after price has moved up. Um, no guarantees that it's going to definitely pull back tomorrow, but I'm just saying it is a reversal candle. On the weekly chart, it looks more bullish. I like Caterpillar overall because it does look, it's above the moving averages in the cloud on both time frames. CRH is as well. This is in the basic materials sector, building materials. That looks good. Last week we broke above the Tenkan-sen on the weekly, and here it is on the daily chart. You can see that the price 3 days in a row is above, and the Tenkan-sen is crossing above the Kijun-sen right there, and the Chiku span is above price, and the cloud is still bullish. CSX on the daily chart looks good. By the way, I've reviewed all these on both the daily and weekly, so I can tell you that they look strong on the weekly chart as well. So I'm not going to spend too much time on the weekly because the weekly is still forming. We won't know what that actually looks like until the end of Friday anyway, right? In the afternoon. But the daily chart looks good here on CSX. It's been moving up steadily, as you can see, up 0.88% today. EEM is Emerging Markets Index Fund ETF, up 0.33%. It's above the moving averages. It looks good overall. It does seem to be stalling on the daily level here. Let's see, what is that? The high there is 60.95. Okay, so it needs to get above that. EIS has actually broken above this high right here of 122.99. It's at 123.29, but it's not really like breaking out with a lot of momentum. The ADX looks good, but the actual candle itself, you can see there's not a whole lot of movement. If I switch it over, for example, to the 5 minute, see how it's just kind of like it got above, and then you can see what's transpiring here. These are 5 minute candles, right? They're just consolidating in this little range, very, very tight. Okay, EWJ looks good. This is Japan Fund ETF. This one's a little bit toppy up here with this reversal type candle. It is a doji. A doji is when you have a flat, basically, body. So it did gap up, but just be really careful with EWJ. It has had a nice run. It might pull back potentially tomorrow. I wouldn't be buying it at that level. EWZ Brazil Index Fund is looking pretty good. I like this one too. There's the daily. There's the weekly if you want to see that. Here's Ferguson Enterprises. I like this one on the daily chart as well. It's up 0.56%. There are some reversal candles, but we're very close to the moving averages here. You got GILD pulling back down 2.37%. I think this one might, here's an interesting thing, right? So the ADX is great because it can tell you at the earliest signs of weakness what's happening. So you can see how the ADX was moving steadily up here, right? Look what's happening now. Do you see it going sideways? Do you see the green line moving down? Do you see the red line moving up? This is not good. Then look at the price. See how it all started with that spinning top reversal candle, right? And that's the bearish spinning top right there. Okay. And so it got under the low there. Now it's pulling back a little bit. It's still technically above the moving averages. So GILD, I mean, it might be a short-lived little pullback here. Here's a weekly chart. Same thing. Very short-lived, possibly. Hilton, on the other hand, on the weekly chart is taking off like a rocket, 3.28%. These are the kind of candles I like to see on the weekly chart. Here's the daily chart, also confirming the momentum. Look at the ADX moving up. Do you see how it's all kind of making sense, right? So I like HILT. Sorry, HLT is the ticker symbol. MAR, Marriott Internet Inc. MAR is the also looking great here. It jumped, it gapped up 8.95% right now. As you can see, it's still moving up. Here is the weekly chart. Very bullish. PWR looks good. Quanta Services down 0.79% today, but this is the weekly. Here's the daily. Now we are getting a reversal candle, and this could lead to something. Sometimes what also happens is price just kind of takes a breather and starts moving sideways and builds a base, and then it breaks through. So we'll see if it can stay at these levels. Okay, let's take a look at the next stock, ROK, Rockwell Automation on the daily chart. It's basically hovering right around that Tangenson and Kijinson on the daily, and here it is on the weekly chart. Um, so earlier when I was looking at this, it was technically above, okay, on both time frames. It looks like it just got under. So personally, I would hold off on Rockwell ROK. All right. The other thing, if you'll notice down below here, is the red line's above the green line. So ROK, it actually skipped that one. Okay. Do not, that's not one that I would jump into quite yet. It looks good overall if you look at the big picture here, but look what's happening with the cloud. We might get a, basically the single span A might cross under the single span B, and then we'll have a bearish cloud, and that's not a good thing. So just wait it out. Yes, it's showing a little bit of strength here, but it's also kind of stalling. RSP, very strong. That's the S&P 500 equal weight ETF. I talked about this yesterday. I said this was a good one. Daily chart and weekly chart looks good too. Here's VMC. That one broke through this 311.74 level. That's Vulcan Materials Inc. Here it is on the daily chart, looking very strong, up 0.93%. Getting a little extended, far away from the moving averages here. VRT, that's how you can tell if it's getting too extended. You look at it to see where the price is in relation to the moving averages. If you see it really far away, you know that, hey, maybe it's time to start thinking about getting out, right? VRT, Vertiv Holdings Inc. There's the daily chart. Here's the weekly. Overall good, but I'm not a big fan of these types of candles. They are reversal type candles. WAB, Westinghouse Air Brake Technologies. Look at that ADX moving up steadily. I like that. Last week was a nice candle. This candle, remember, the weekly chart is still forming. Here it is in the daily chart. We had a reversal candle yesterday. The question is, will we get back above the high of that candle, the 248.78? It hasn't happened yet. It's up 0.7% today. And XLI is the industrials ETF. That one is still looking good here, of course, on the daily chart and on the weekly. The rest of these stocks, there's something off technically with them, and there's a lot of them, as you can see here. So I'm not going to spend too much time on these because they don't really meet all the criteria that I would be looking for. And so we don't really need to spend too much time. I'm just going to show you guys what these look like. Here's Apple Oven, for example, under the cloud, very bearish. A series of lower highs, lower lows. We are in a downward channel. What else? We got Delta Airline. This one looks good on the daily chart, except for the fact that Tengenson and Kijinson have merged right there. They're at the same level. I would just want to wait for that to get back above. On the weekly chart, I was looking at this earlier. It still looks pretty bullish. So yeah, that's the one thing that's off about that one. D-Dog is under the cloud. No on that one. Dow Jones, sorry, not Dow Jones, Dow Inc. It looks very good on the daily chart. Technically, I don't like these fundamentals up here. The negative profit margin, negative sales growth rate. EBITDA is negative as well. However, on the weekly chart, we're inside the cloud, so no on Dow. EL, Estee Lauder companies. It's under the Tengenson. Okay, so no on that one on the weekly chart. GLD, it's above the moving averages on the weekly. On the daily chart, it's in between the two moving averages. So gold right now is still stalling, has not been able to. I might as well throw on that trend line that I talked about in yesterday's video. I said there's a price, basically, in my opinion, needs to get back above this high here of 470.06. Okay, it's based on that candle. It's kind of like an ascending triangle pattern right there. Do you see what I'm talking about? Right. So it's been stalling in there. We'll see what happens with that. That's the daily. The weekly chart is still looking pretty bullish with gold. But remember, since we broke down with this reversal candle, I am not 100% trusting that this is going to continue to the upside necessarily. But I'm still relatively optimistic because we did, in fact, get back above the 9 period here in the weekly. The daily chart is a little bit concerning what's happening here these last few days. So I'd like to see more momentum. And look at the momentum for gold is just like, you know, people are not too excited about it. And you can see that in the ADX as it's dropping. Think of this white line as the excitement level and how in momentum basically. See how the okay. And when it starts to decline, so there's just lackluster sort of movement in the price. Goldman Sachs, Tenkan is under Keynesian, so no on that one. Robinhood is under the moving averages and under the cloud. No on that, of course. IBIT Bitcoin is under the cloud and moving averages. No. IGV is the software index fund. No on that one as well. Notice how it's stalling at the Tenkan. Oracle, we got a doji today. That's not good. It's a reversal candle. It's under the Keynesian. Even though it was up 2.08, I wouldn't get excited about that either. OTIS, Otis Worldwide Corporation, no on that one. It's under the 200-day moving average on the daily. And if you look at the weekly chart, it's under the cloud. PCG is inside the cloud on the weekly. On the daily chart, it's above. PLTR is under the cloud. QCOM is under the cloud on the daily chart. Silver, under the moving averages here. The silver looks weaker than gold, in my opinion. We're getting ourselves a bearish harami right here. SNPS, Synopsys Inc. No on this one. It's inside the cloud. Toast Inc. Under the cloud and under the moving averages. No. Uber under the cloud. Do you see how easy it is to assess the situation, folks? Why spend the extra time analyzing something that's obviously broken? It's still broken. Vertex, it's technically above the cloud, but it's currently under the Tenkan. It can easily get resolved if price tomorrow breaks above. On the weekly chart, we're still very bullish. In fact, one of the things I like about Vertex is the fact that the single span A, if you look really closely, you'll see it's just barely emerging, like it's popping its head out. So that is good. So we'll see if we can see. Again, I'd watch that daily chart very closely and see if we can get above that Tenkan. The Tenkan is currently at 471.04, and we are at 463.48. Wynn Resorts, it's currently under the cloud. One thing I like about it, however, is the fact that look at this trend line, this beautiful trend line that I drew, folks. It's beautiful. It's a beautiful trend line, right? So look at this right here. So you can see the high there, right? And then look at the how price touched that. So that's how you can build off of that. Ironically, it did touch there and dropped, touch there, dropped, touch there, and there, and dropped quite a bit, and then finally broke. That happened on Friday. So on Friday, we broke above that trend line on the daily chart. If you look down below, positive DI is above the negative DI, so that's good. But the ADX is still moving sideways. We're getting some reversal candles here. I like the fact that price stalled at the trend line. So what used to be a level of resistance in the past has now become a level of support as long as price remains above it. But with all of that said, would I consider buying Win here? And the answer is no, because it's still under the cloud, and this could be a fake out. And so Chico Span is still under price. I certainly would not be shorting this stock because of this. So that's the reason I'm showing you some positives here in this stock. ZTS, Zotis, is inside the cloud. No on that one on the daily chart. Let's keep going here. Now, these three stocks, folks, are from our members. So we got Roku. Now, this one here has been showing a little bit of strength these last few days, but unfortunately, as you can see on the daily chart, it's under the 200. It's under the Tenkan. Not something I would be touching here. right? And here it is on the weekly chart as well. It's on the weekly chart, it's creating a bullish harami, right? Something can lead, it could potentially move up. And so if you have a position in Roku, you can follow it. You have to watch it very closely because if it breaks down in the weekly chart, you're in trouble. The good news is we are technically on the weekly chart still above that 200 day, and we're still above the cloud. But again, the daily chart is a little bit concerning. What about PayPal? PayPal, look at this under the cloud, under the 200. It's showing some strength recently, just 3 days. But 3 days is not something I would count on. You can see 3 days of positivity here before it dropped. Here's some more and more and more. And it tends to just continue to drop. Here's a weekly chart, and you can see that everything started to fall apart back here on this candle, February 7th, 2025. So from that point, it's dropped 52.23%. Now, on the weekly, we are developing a bullish harami here. It's up 0.83%. So here's a daily chart. It's been moving up 3 days. You could certainly use a 4 hour to start monitoring this, or a 2 hour. Start monitoring it very closely because it is showing a little bit of strength here on these shorter time frames. Here's a 1 hour as well. So it seems to be at least for the time being stalling. It stalled around on the 5th of this month. 5 days ago, the low was 38.88, and since then it's moved up 6.82%. Maybe something will happen here. Okay, and let's take a look at TWLO, Twilio. Here it is in the weekly chart. So Twilio has been staying above this trend line for a while. This is something I had drawn a little while back, I think. Let's see, when was that? Wow, created back on October 23rd, 2025. So originally, and you can see that price has been stalling. Now, again, this is a weekly chart, guys, right? So there's a touch right there, another touch over here, it pierced that trend line, and then here it's staying above it. I think there's a good possibility here that this price can break above um, soon on the weekly chart. It's looking more and more bullish, but we are into the moving average, so I wouldn't be adding a new position here yet. On the daily chart, we're still into the cloud. So there is some positivity on that weekly chart that I just showed you. So remember, the weekly is, in my opinion, stronger and more important than the daily. And although the red line is still above the green line, this trend line is positive. We're experiencing higher highs and higher lows. On the weekly chart, we're still technically in an upward trend line. Do you see that? That's an upward channel right there. So let's see if it can hold up above that trend line. If it breaks under that and breaks under the cloud, then you're in trouble with Twilio, in my opinion. So just watch that very closely. And that's going to do it. Thanks for watching, guys. I appreciate all of you. I hope you have a great rest of the day. Don't forget to like, subscribe, consider becoming a member. Hit the join button on my channel here, right next to the subscribe button, and you can get access to these member only videos. You do need to become a Blue Cloud trader. So there's 3 levels, or Blue Cloud Legend to see those videos. Under Legend, you'll also get those daily stock and ETF trade updates. All right, guys, that's it. Catch you all in the next one.